Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. It's a President's Day. Um, so most of the market is closed. There's an electronic market right now in a few products, like oil, the stock indices, and we can see obviously the currencies are always trading. It seems like no matter what's going on, which is kind of neat. When people talk about like blockchain and cryptos, you kind of not only do they seem to trade 24/7, the currencies themselves do the same thing. So it's kind of funny to hear that that's the excuse why you need blockchain. I'm just in favor of blockchain just solely because it's just a new asset class. I have no problem with new asset classes versus an old one. And you can see here as we look at on the screen here this morning, I'll show it to you. There is the Swiss on J4X. You can see it's been moving down. That means the dollar is going down in value. And same thing over here on the Chicago Quant. You can see same thing going down. Then there's sell since here. And pressure's on there at the same time. So I guess we're going to watch it bounce off the green area again. It's done that for a few months now. It just bounces off it, comes back. And maybe there'll be a little more pressure. Maybe it'll take it down to the bottom end of the range this time. It's so hard to say, in that sense. All we do is follow the math. As long as we're in a daily sell and we get into a weekly sell, then I would believe that the odds are very heavy in the 80s and 90s that it's going there. And when it's in a weekly buy and a daily sell, then it's just a little mixed up until it figures out the full direction. So in the case here, you can see where the uh, the Swiss against the dollar, or the dollar against the Swiss right there, went into the weekly buy, and we've been, kind of finding ways to go higher, and it goes down, and it tries to go higher again. In this case here, and now and at the same time, we've been following this range for a few years, this literal range here, and not just a few months, but a few years. And the central banks like to try to keep their currency in a particular envelope or range so that they're not listed by the U.S. Treasury as a manipulator. Yes. Can you imagine that? That's even in our vocabulary. It always makes me kind of laugh. The manipulator. Matter of fact, we may have to make that the title. Currency manipulators. Who are they and what are they doing today? That type of thing. And so, we look at many different things here when it comes to trying to understand the value of something. Obviously, the price is the number one reason, or answer to it all. Is just look at the price of what it is. In this case here, the Swiss is moving down. That means that the dollar is moving down, and that means it's losing value. Uh, and in this case, the Swiss is been trapped in a nice tight range for a while. Uh, you can see there, I don't know why we don't have the black lines there, but, oh, I know that's the Fibonacci at that point. That's what it is. And it just stays inside that range throughout you can see there's 7 months of it. So August, September, October, November, December, January, February, getting ready to go to March. So we're looking at a good 7 months of it just playing that. Sometimes it slips above the range a little bit, and then it rolls over. It just doesn't seem to want to make any real clear change to their direction. You can see it there too on the J4X. Basically, it's just been locked in a range for a long while. That's all the way back to August of last year. And that's the way it functions. And when we hear our treasurer, the U.S. Treasurer for the Treasury Department in the United States, come out every quarter, and we don't actually under Mr. Biden, they don't announce it anymore. Under Mr. Trump, they used to announce it. This way we had a better idea what was going on. In a Biden era, they just do what they want when they want, and then just let it fly from there, I guess. As I take a sip of my tea, there just doesn't seem to be as much concern about what they do. I guess that's why his polls are so low. They do whatever they want, and his polls are the lowest any president's ever seen. That's how it works, I guess. So it's like, why pay attention to the people when you have the media telling everybody you're great? Yeah. But anyway, that's where we are with the dollar. It's going sideways and down at the moment, and we'll see what where it stops if it hits the 50 percentile again in this region here, and then bounces back up, or this is something bigger. Would be interesting to see it get into the weekly sell and join in with this daily sell, and maybe it will go take out the bottom end of this range. All right, heading over. Oh, you know what I need to do is get the chat line up there. I didn't get the chat line up there. Let's go tune in and see if anybody is asking any questions. I've yacked away for 5 minutes without turning it on. There we are. Let's see it. One of the things that really caught my eye this morning was the, what is that? I don't even see the chat line on there. Where's the chat line? Interesting. No, I don't even see it. I don't see anybody asking questions or doing anything. Interesting. One of the things that caught my eye this morning was the Big Mac indicator is out. And some of you might say, what is the Big Mac indicator? Well, if anybody knows what a McDonald's restaurant is, that they have a sandwich called the Big Mac. And the Big Mac is trading, you know, they look at what the Big Mac is trading in Tokyo and what it's trading in you know, New York City, and what it's trading in Chicago, and what it's trading in Berlin, and you know, Manila and Philippines, Singapore, and so forth. They look all around the world and see what price they charge for that same specific sandwich, which is supposed to be, you know, since it's a chain, it's a global chain. You know, the sandwiches are supposed to be identical in nature and taste and quantity and so forth. So the Big Mac index came out and said something about the what was it, the Chinese. They didn't say exactly where that is, if it's in Singapore, or not Singapore, I'm sorry, in Shanghai, or if it's in Beijing. They just called it the Chinese Big Mac. And they're saying it's like 34% undervalued. Now, I tried to figure out exactly what that meant. You know, I thought, well, that's an interesting thing, because, matter of fact, I guess I could try to put up some of the prices, and you'll be able to see it. It's kind of fascinating, really. Let's go there. Let's see. Right there. No, that. There we are. Let's separate that. We're going to get that chart right up, or the Big Mac indicator of currency values. Isn't that interesting? Right there. And we're almost there. We're getting real close. Like that, like so. Why is it doing that? Make that bigger. We'll get it up on the screen here. It's fascinating. There we are. Now we've got it. And this will be in front of you in a few seconds. There we are. And so there's the Big Mac indicator. And you see there's Norway at 606, 705. Based on the economics of Big Mac index, expensive to the far left. So Venezuela is, and then Venezuela is, I guess they're starting to smooth it out now. So Switzerland was the most expensive in 17. Norway was second most expensive, and then 18. Now 2019. And let's see what else. Oh, okay. Big Mac indicators. That's interesting. That cracks me up. Right there. There we are. So now where's, they don't see some places like it says Singapore. Well, let's see. There's Russia, Ukraine, Hong Kong. Where's that Hong Kong? Let's go back to that Hong Kong. I saw Hong Kong. It's like 280. Let's see if we can get up to 2020. No, let's see right there. There's 2022. Oh, let's move that over a little bit. Right there. There we are. There's 2000. Let's get rid of that. There's 2022. And you see Venezuela has kind of calmed down now. It's a 506, but Switzerland is still most expensive. Isn't that interesting? 698. Let's see what New York City is. Where's New York at? There's Turkey. Turkey is $1.86. Let's see. There's the UK, 482. Where's the US? There's Canada, Israel, Sweden. There's US, 581. Okay. So it's an interesting way of looking at things. And then I guess if we looked at the currency, you know, and see if we could see some type of logical correlation between it all. Pretty fascinating in its own right. Based on the Economist Big Mac Index. I don't know, I find it to be a fascinating thing myself. Over the years, we've always watched to see what it says. You know, just because it made sense to keep an eye on it. And you know, it sometimes gives you some heads up. I remember when Tokyo jumped ahead of New York or something like that. I remember back in the 90s, and people were like, oh my goodness gracious, it's more expensive to buy a Big Mac in Tokyo than it is in New York City. You know, that type of thing. And you can see there's Taiwan, 270. South Africa is 258. I saw China. China was like, there it is right there, 383. So it's not like you know, it's interesting. There's the Eurozone. There's Switzerland, Norway, US, Sweden, Israel, Canada, Venezuela. How come Venezuela, since it's a communist country, and China, they're not the same price tag? I don't know. Czech Republic, Chile, Thailand. Interesting. Poland. But it's interesting to see the top tier ones here. Switzerland, Norway, US, Sweden, Israel, Canada, and then Venezuela slides in there. There's the Eurozone, 495. Maybe that's Belgium? Who knows? The Eurozone. This isn't Switzerland in the Eurozone. Is it Norway in the Eurozone or Sweden in the Eurozone? Or, well, the UK used to be in the Eurozone. I just find it to be a fascinating tool. Alrighty. Let's get rid of that and go back to the charts. All right, let's take a look at the euro this morning and see what the euro's up to. Right there. It went into the weekly sell last. Did it go into the weekly sell last week? Yeah, I think it did. Yeah, it closed in the weekly sell for a second week last week. That's what it is. It's 2 weeks now in the weekly sell. It wasn't a daily sell. It's been a daily sell for 2 days. Pressure seems to be just kind of flattish. Remember, this is an American holiday, so the banks are closed and the institutions are pretty much closed, and so there's not a lot of trading going on, and I really hate trusting any stats when the U.S. is closed because a lot of times it just goes the opposite direction. Sometimes it doesn't, sometimes it does. It's not really a real consistency. It'd be different if when the U.S. was closed and you watched the rest of the world, and then on the following day, like the U.S. joined in, but it's usually the opposite. When the U.S. joins in, sometimes it switches total direction. So that's the reason why we try not to put out charts or do anything like that, because we don't want to confuse people. Now look at that, the way the euro. Oh, let's put that back. Right there. Okay. Look at the way the euro has been really flatlining in here, you know, over the last 3.5 months. That's something. That is really something. And since late November, it's been one consistent little flat line. Goes up, hits the 50 percentile, and stalls. And you can see how it's been trapped inside that range. And you know, a little surprising that the euro found its way back into the weekly sell, but then, you know, sometimes you get into this thing where, you know, it gets into the weekly sell here. You can see it works its way down all the way to the buy. And then the buy it goes into the weekly buy, we run up, and then it starts to roll over again. You get daily sell and warns you, and then it's just like, then it goes in and out for the last 3 weeks. And then now we're on a second week on a sell, so you got to wonder, is this going to be another one of these, you know, where we start to get a long-term move on the downside, and this is the top, and that 50 percentile in the Fibonacci sequence basically, you know, enlightened us to that fact. I can't see if anybody's chatting. I don't know why, but something seems odd out of this whole thing. Create, let's see, history library. Where's the chat line? Did I turn off the chat line accidentally? I can't tell. Let me see if I can tune it in somewhere else, because it seems a little confusing to me why I'm not seeing the chat line. Just close that again. Or did Google change their chat line, that type of thing? Let me go like that. And we get into it like that. There we are. No, I don't see a chat line, which is kind of curious. And we don't. Can I see where anybody says anything? So see, Dow considered. Trying to see if I turned off the chat line. Facebook, check out Forex platform. See more on Dukascopy analysis. But I don't see the chat. Oh, there's chat. There. Okay. I think I got it. Top chat. Live chat. There we are. I think I've got it now. Not sure why it does that, but anything's possible in this situation. All right. From there, we'll go over to the cable. See what the cable's up to this morning. There's the cable. Kind of firm, and it's playing with its weekly buy finally. Are we going to see this break out on the upside? Whereas the euro, for some reason, seems to want to break out on the downside, which is a real surprise to me. This does look like a reverse head and shoulders. Maybe it needs to do more shoulders here, and it'll just kind of bounce around in here, maybe challenge this low here, but won't take out those lows, just this low or something like that, or maybe just this low, but not that low or this low, and it will become the reverse head and shoulders, and then maybe we'll see the euro lift up. By then, I'm sure we'll be in a weekly buy when it starts it. That's for sure. All right, and then let's put on the British pound. Let me just check my Skype just to make sure. And Giannis would say something to me on the Facebook too, if there was some mechanical problems. I'm sure everybody's hearing me. Yep, I don't see anybody jumping out at me, so obviously not bad. All right. Now let's check out the Skype just to make sure no one's trying to communicate with us at the same time. Where are you, Skype? There you are. And then we'll go back up and look at the British pound. I'm just using my eyes on the Skype at the moment just to double check to make sure, because I'm not seeing anybody chat or say I hear you. I hear me. Okay, I don't see anything on the Skype either, so this is good. All right, this is just a slow Monday. That's all that is. All right, so the cable, you see it's lifting up. It's been in a daily buy now for, this is its 4th day, and now you can see the weekly is trying to turn up. Since it's the holiday here, you know, we'll just, you know, not take that too serious at the moment, but it is, we've been waiting for that to try to move above the zero line now for, you know, I don't know, weeks upon weeks. I was really surprised when it went into this weekly sell here, right there. I was really surprised when it went into this weekly sell off of this week right here. And it went down, but then it's gone up, and it has never really visited that area yet. I mean, it's visited where it went into the sell here, but it's never going down to visit those lows again. And that has been a surprise to me why it's surviving in the weekly sell. But then it's the math. It's the way the math works, and I try not to tell the math or ask the math to do something that I don't understand to begin with. So that is really what's going on now. All right, from there, and like I said over on the J4X, let's get rid of that. There we go. On the J4X, you can see that there's like a reverse head and shoulders trying to develop here. Look at that low. Oh, that's the euro. That's on the euro. Sorry about that. Got to get the cable up there. Yeah, so the euro is trying to do that head and shoulders thing, whereas the cable's looking fine. It's just, I think it's digesting from all the Brexit noise, and we're just going to keep on seeing a higher lows over the next couple years. I think it's just going to inch its way slowly up. Just keep on pushing. I really think that it's going to firm up against the dollar. Just solely because they're really showing a level of responsibility that is really needed in this inflationary era. And it's been somewhat of a disappointment to see the Federal Reserve not be able to figure out how to. Ooh, they're beating Bitcoin up today. I see that down over $2,000. I'm really surprised that we're not seeing more countries join in with the raise of interest rates. But I read an article this morning. I guess this quarter, I wasn't going to really mention it besides the hamburger index, but there are some central banks. They were talking about some central banks that are illiquid at this point. They don't have any real cash reserves. They've burned them up. Their portfolios are packed to the gills with equities in their countries to try to keep those equities stable, firm, whatever you want to call it. That's why it's very hard to believe that the U.S. Treasury can actually come out and say, "Oh, by the way, this country's manipulating." In a quantitative easing era, it's awful hard to take that concept even serious. That there is a concept. There is a concept of manipulation. Really, I don't know how to define it. I mean, why is central banks literally buying bonds and equities up not manipulation? That's the bigger question. Why is that considered not manipulation? But, some company wants to buy more currency than it necessarily needs to. Why is that considered manipulation? That's the weird part. I don't understand how they could even use the word. So. And I'm not going to get into that too deeply, but it does have me scratching my head. It must be a political thing they call manipulation. And there's dollar Turkish lira doing its natural thing now ever since they gave out the free puts. Free puts for anybody that buys the currency, they say. You have to check with your banker to get that correct, but as far as what I've read, that's how that works there now. They give a free put when you buy their currency. So they guarantee you not to lose money. Same thing here on dollar Turkish lira right there. Let's put dollar Turkish. And this is flirting with that weekly sell this week to start off with. Let's put it up on the screen here. There it is on J4X. There we are. And you see that, this is going back, I guess, what's that, 2 years. And so, you see there, this is the beginning of the free put era right there. And that's going to keep things pretty stable and stop all this wild action here. Boy, what a tear that was. Going from the 8s and 9s up to the almost 21. Ouch. That's got to hurt. To have your currency move like that. All right, from there we'll go over to Canada. The truckers, I guess they've got them all locked up now or something of that nature. I don't know. Well, I know they've arrested like a few hundred, and they've been, took their bank accounts or frozen their bank accounts or something like that. It's very weird. Trudeau, his father did the same thing 50 some odd years ago, and now the son is doing the same exact thing, 52 years later. And they're not at war, but they declare an emergency, and they have to control freedom of speech. It's not really a popular thing here on the North American continent. When they started that about 3 or 4 months ago, there was actual serious talk. I guess it was Alberta was talking about joining the U.S. I guess their federation I guess they have 5 states or something like that, provinces, and they're really threatening themselves by being so dictatorial. All right, what's next here? That's Canadian, and let's put Canadian up on the J4X too. Right there. So you got the Canadian kind of trapped in a little range there over the last 3 months, I guess you could say. And we were surprised because oil has marched up, and a lot of times when oil goes up, Canadian goes down in value. But we're not really seeing that right now. It's the opposite. So that's got to do with the lack of freedom of movement and speech in Canada out of nowhere. That's very strange. All right. From there, we always go take a look at energy, and we take a look at gold. So let's just see what they're doing this morning. They are trading those two products electronically here in the States. There we go. There is gold. It's a little underneath the $1,900 area, but again, the markets are, a mild holiday-ish period here. There's the gold there. Just down a little bit, nothing major. Going on a third week in a buy. A little weak, but that's the way it goes at the moment. And you can see here it's been in a daily buy for like 12 or 13 days. It's been a very solid move. Now we'll take a look at oil. There's the April contract. We switched over to April now. You see that's just a little bit flattish up. It's 2, 4, 6, 8. This is the 9th week in a weekly buy since the mid-70s. And, oil's doing well. So I'd imagine the South African rand, because gold being at least firm for the last couple of days, I think the rand is doing pretty well. So let's see what the rand looks like. You see that there, a second day in a buy. Didn't realize it moved up so much on Friday. Just sloppy action today. You can see how it's driven down and now popped back up. And that is the South African rand. So we were looking for it to break the 15. It got down to the 15. Ever since we went into this weekly sell, we thought, this one's going to do it. Now notice this product a lot of times will just stay consistent. It goes into a weekly buy or goes into a weekly sell and lasts like 3 or 4 or 5 weeks, if not longer. And that's pretty cool. In this case here, it went into the buy on this week. We had a nice pop the following week, and after that, it just rolled over. We went right into the sell. Short-term warning came out, and we knew that there was no more gas in that move at the moment, and it just stayed that way. And then we got finally down to the weekly sell, and we were in another daily sell again, and it was a winner, chicken dinner. And you can see how long that one went on for that, and every sell was a scrumptious winner, chicken dinner. And you can see here we are now. Oh, look at that. We are flirting with the buy on the South African rand on the upside. That's not usually a good sign about the metals complex. So maybe we're coming towards the end. I mean, Mr. Biden said last Wednesday that the Russian Federation was going to attack. It was imminent that hour that the Russian Federation was going to attack Ukraine. And obviously it has not. And here we are today. Today is Monday, so it's 5 days ago, and every day he says it. He says, yeah, Russia's going to attack Ukraine right now, in a few hours. He says that. He doesn't say maybe. He doesn't say over time, we'll watch and see. He just says it right out. He says they're going to attack. So it's really confusing because every time Mr. Biden says something, it's usually not working. You almost take the other side of it. As long as he keeps on telling us Ukraine is going to be attacked by Russia, more than likely it will not be. All right, and I guess that in some ways, it puts pressure on the metals complex because we have seen gold. Let's go back to it again. We've seen gold make a move all the way up to the, that's not gold, it's crude. We've seen gold make a move now all the way up to the 1900 area. See 1904 there. And today it was as high as 1910. And the invasion hasn't happened. It just keeps on skipping a beat. And when it doesn't happen, he just says, well, it's going to happen tomorrow. He's a funny guy. He's a really funny guy. Somebody say something in chat. Just put a number in there, or don't even use a letter or something. I just want to see if we're actually receiving the chat line. It just seems odd that we're not. That I don't see that. You just throw a letter or something, a number, just to make sure that you hear me. It makes me feel like I hear me. I can hear me. It's just that I'm not sure if anybody else can hear me. I hear me. I'm sure I'm being heard because someone would tell me very quickly. All right, from there we jump back over to the ruble. Right there. And it is popping up. I'm a little surprised because I thought they resolved a lot of their issues. They didn't bomb, or let's put it this way, they haven't attacked Ukraine like Mr. Biden says every day that they're going to do. And when they don't, he just says they're going to do it tomorrow or in 3 hours, something like that. Actually, it has it down very tight, minutely. It's like, oh, it's going to happen, in the afternoon. It's going to happen in the next hour. He's a funny guy. I'm sure Ukrainians find him enormously funny. All right, and so there, we're in a weekly buy on the ruble. It's trying to push up for going on a third week now. And you can see we're in a daily buy for 2 days now. Just put that green line in there. We went like this. It was buy, sell, and then buy again. They've been weird. And we were in a weekly buy, so there's one of those. It's not a chicken dinner winner, that's for sure. And a daily buy, a weekly buy, and it was a loser 100%. It's a rarity to see any of our math ever do that. And now it's making it back right there. So I guess they're going to push the ruble into the 80s, maybe? I don't know. I'm a little surprised. I myself am usually a bull on the ruble. I kind of think the ruble should be like in their 40s or something like that. I mean, if the yuan can be trading at 6.5 or 6.3 or 6.4, you would think the ruble would be trading at, say, 20, 15. I mean, I don't see China any more wealthier or less wealthier than the Russian Federation. So I don't understand how the yuan is, a fixed product, so it's not floating, and the ruble is a real currency floating. So I mean, that's how a currency should be. It should be floating. It's not a currency if it's not floating. It's just exchange, I guess you could say. Right there, the yen. The yen is moving back down, showing a little weakness in here. Went into the sell right there. Let's put the line in there. And it's been fighting to stay in that sell, and it's in a weekly buy. You can see the lines are really zigzagging all over the place. There was a red dot for that one there. That's why it didn't have the line in there. And, and that was a red dot there too. I'm not sure where the dots got to. But the end result is we're just watching it slowly leak. This area here is 5-year highs. So we were wondering, is it inflation adjustment, or is it just a change of the channel, or more GDP than the U.S. or less GDP than the U.S.? I mean, what makes this currency move at any given time is, it's more than just buyers and sellers. Obviously, it's controlled by the central bank, like all other products are controlled by the central bank. I guess you could say then, well, why isn't Turkey doing well? They couldn't afford to lock it in. They have to give out free puts to calm it down. Not everybody gives out free puts. In fact, I don't know if anybody else gives out free puts on their currency. So that's where we are with the dollar, or the dollar yen. Yen is floating around the 5-year high, and we'll see if they try to drive it up into the 16s and 17s and the 18s. Something I could see it going to 18. Probably shake up the people thinking it never could make it to the 20 area, and they'll get trapped somewhere between 18 and 19. And I think it's going. The world's coming to an end, and next thing you know, it'll be trading back down to 115 again. All right, from there, we drift over to the Mexican peso. Another partner here in the North American continent. Right there. And it's doing its best to slide right back down to the bottom end of the range, so that's nice. And this noise that occurred here was Mr. Biden having a meeting with Mexico and the President of Mexico and the Prime Minister of Canada. And obviously, no one liked what he said, but as time went on, they realized that he probably doesn't have any follow through, or he may not remember what he said to begin with, or whatever. I mean, really, yeah, that's why there's a bunch of congressional people asking for him to have a mental test, because they're not confident that he's really that healthy mentally. Luckily, we're a republic, so the president, as powerful as the president is in this country, then they don't control the country as much as you think they do, because each state has power on its own right, the Constitution. And when a bunch of states get together and say, hell no, we're not doing that, more than likely they're not doing that, no matter what the president says. So unless it's against the law, it has to be against the law. So pretty much anybody who's been against the law is, unfortunately, Mr. Biden has been the one doing it. So there's not much of a, that's why all the states seem to keep on winning in courts against him, is because he's the one that's breaking the rules more than anybody else. But anyway, there's the Mexican peso heading down to the bottom end of the range, gaining against the dollar, which is kind of neat in its own right, to see that strength come into the Mexican peso. All right, that's the end of the currencies. Now what we'll do is we will jump over to, where are we jumping over to now? Let's take, the world is kind of closed, so let's just take a look at, what I want to look at is one of the currencies I like to look at, because it's like a hobby of mine, and that's that GBP JPY right there. And it's in a sell for a second day, but look at what it's doing this week. It's trying to lift up into the buy. Went into the sell 2 weeks ago, and it didn't really go down much. Let's see what it looks like over here. And that's really the big gist of it all, I guess you could say, and that is that the GBP JPY, which is another nice, consistent product that likes to follow the weeklies and the dailies very comfortably, is showing that type of action today. We'll see how it plays out over the next 48 hours. Because tomorrow will be Tuesday. That'll be the first day of the week for the U.S. markets, and we'll see if there's some direction here. The fact that they didn't have a battle in Ukraine yet kind of changes the tone, because with the market opening up, I mean, Mr. Biden made it very clear that Russia was attacking Ukraine next or last Wednesday, and it had the markets jumping all over the place. But we're not really seeing that now. It's going on 4 days past, and it hasn't happened. And tomorrow will be 5 days past. 5 days? No, it'll be 6 days past. So today is 5 days past. So that concern. I mean, gold ran up like $31 finally, but we're seeing now today. Let me just show you what Bitcoin's done. Bitcoin's getting beat up. And we see, gold, you can see that right there is just sloppy down, nothing major. But here's Bitcoin. Right there. They're really pounding down on it. We've been in the sell since here. And now the weekly has drifted back into the sell again. This was interesting. Last time I went into the sell was back here, up in this almost the $70,000 area. Went into the weekly sell. And I traded all the way down to 33,000, basically 32,900, and then went into a weekly buy 2 weeks ago. It tried to go up. It keeps on finding ways to get up and touch the high and then roll over. And now we are 3 days in a sell. Today's the third day, and at the same time, let's move that over like that. There we go. At the same time, now we're playing with the weekly sell. Let's see what it looks like over on Forex. There it is, right there. There's Bitcoin. And you see they're flirting with those lows. So the love of the product line is really thin. And they're not really doing anything. In the sense of, buyers have disappeared altogether. I guess, in many ways, we've been somewhat disappointed of it, but, you see the strength here, the way it climbed up during the real fear of an invasion into Ukraine with the Russian Federation. Now let's just take a look at gold, doing the same exact thing. So in many ways, the gold and the Bitcoin, and they've all found a way to join together. They're not really working independently. They're kind of joining together in many ways. Now in this case here, we have 3 days of gold up at the top, but of this $19 range that we haven't seen in what, 5 or 6 months, something like that. Yeah, not since May have we been up in here. So you're looking at, honestly, you're really looking at 10 months we haven't been up in this area. And then when you look at Bitcoin, you're seeing that action. It's even harder. It's getting pounded down even harder, putting some real pressure onto it. And we've seen where the cryptocurrencies sometimes march along with the stock indices and the gold. They don't march separately. And that was pretty much a lot of us that enjoy and really support the idea of cryptocurrency or crypto assets or whatever you want to call it. Was we were hoping that it would be separate following the stock market. It wouldn't follow the stock market. It would show different concerns, and it wouldn't follow the bond market. It wouldn't follow the metals market. But they do. They do. And then that tells you the mindset of the type of people who are buying it in the institutional side. Because that they're the only ones who can really move this thing. All right. From there, let's see, there's Bitcoin. Let's take a look at silver. I imagine silver is looking like Bitcoin. No, it's holding up. No, it's not. It's getting knocked down. We'll start to see a red soon with that one. You see it here, pressure's on. It's underneath the weekly, no problem. And we are flirting. You can see it's 12 and change right there. So it's at 0.12. So basically, it's just holding on by the hair of its chinny chin into that buy. And that's the silver. All right. Now let's jump over to. I guess we could take a look at the stock indices since they are moving. Let's do that. There's the Tech 100. You can see it's at its lows. It's going after the January lows now as we speak. It's taking out these lows right there. The low there was 13,890, and the low there was 13,860, and the low there was 13.706. And as you can see right there, the low is 13,809. So it's taken out everything but that last one. That will be I guess it would be like a 5-month low, 6-month low. That's the last time. Okay, there you go. The last time was May of last year. So that's almost 10 months ago. 9.5 months ago. We're looking at the Nasdaq 100 really pressuring itself down. You know, it's very interest rate sensitive, and because of that, we see a lot of pressure. Where this was the all-time highs, and now it's rolled over. Now let's take a look at the S&P 500, which is less interest rate sensitive. And you'll notice that it's holding up pretty well. It's not going after the lows here, but it hasn't taken out these lows yet either. And that's the all-time high right there. And let's see, what else can we say about that. We are going on a third day in a sell. It is flirting with the weekly buy as we speak. That'll be, we'll know much better by Wednesday for sure. And then, and let's put it up on Forex too, just to get a flavor. Right there it is. There's the Tech 100. And you can see all that pressure. And then let's put the S&P 500 in there. And it's having that same flavor, just not as low. They're not pressuring. Then let's take a look at the Dow Jones Industrial Average, like the least product that's really cares. It does have that look though. Let's put it up on here. Because it's not that far away. Well, I guess it is. It's the all-time high is right there at 36,832, and we are what? We're 3,000 points off of it. So that's pretty aggressive. We're not seeing this challenge this base here, but it is challenging this one right there. All right. That is the action we see in the 3 stock indices, and since and let's put it up on there. It is. Yeah, I can see it up on there. Let's put it on. Let's find the last one that we watch in the States here, and that is the Russell 2000. And there it is right there. It hasn't taken out these lows yet. I guess some people are thinking the Russell's going to take off. Russell is I guess you could say it's our smallest index. We mentioned it here so often. It only has like companies that are like $500 million in what do you call it, capitalization. That's the smallest. The biggest I think is 2.5 billion. I don't think they do 5 billion, but they could. They won't be any bigger than that. Whereas you're looking at Apple, it's almost $1 trillion. You look at Microsoft, it's almost $1 trillion. You look at Amazon, it's almost $1 trillion. So they're like incredible amounts of financed product. Enormously successful. All right. Where do we go from here? Let's jump over to, grains are closed, so we're not really seeing any action in the grains. And the stocks are closed, so we're not seeing action in stocks per se. They are swinging this thing. Let's show you the intraday. This thing is moving. Let's see, where's it opening up? Right there. They are swinging. This thing is swinging pretty aggressively. It's going to fill in here. You see that? There's the S&P 500. It's the low is it's only 3 points away from the low. It made it there a few minutes ago. Right there was the low. That last bar was the low of the day. I think that's what that is. I have to double check that. There it is right there. Let's make that bigger. Maybe in the European hours did they go after it? I guess not. That's Friday, right? No, that's the 20th, so that's Sunday night. So yeah, they've thrown a low in there, and the low is 30. Where's that? So they made another new low just now, 299.50 now. They're making them as we speak, and this thing is down. This is the S&P 500. It's down 42 points. Let's take a look at the Nasdaq. You can see the Nasdaq doing the same exact thing, down 215 points. At one point, it was down 260 points, no more than a few minutes ago. There's the low of 13,774, and right now we are 6 points above that, 8 points above that. So you can see how fast it's flying. It's going full points. It's not even trading half points or quarter points anymore. It just went from 575 to 275 to 375. Now they're trading some inside points there. 175. 450. Now it was 6. That's 86 it is. And so it's coming off of its lows right there. And then the Dow Jones Industrial Average. Let's see where that's at. Right there. There's the low. That's 724. And it's just floating around there. There's like I said, there's not a lot of, it's again a holiday, and combined with no invasion, maybe we're thinking like not to worry. I guess in many ways, it's like the World War I thing, where everybody was convinced that once Europe went to war with itself, that the United States was going to lose Europeans as customers. I guess it was, you're talking about not 18, I'm sorry, you're talking about 1914, something like that. And so, there was this real concern in the United States that who's going to care about us if they're fighting? And the first thing that happened was a lot of European countries moved their gold and so forth and their equity here to the States instead of Switzerland. And all of a sudden we found out, oh, I guess we're a safe haven too. And so, that was like 50 years after our Civil War. And it was like, wow, people are not running away from us now. They're plowing money into us instead. And that seems to be the recipe of it all. It really does. Now you can see there, we just were minus 260 something, and just fell to minus 230 something. So it's, it's trying to rally back a little bit. They're bottoming in there. They're buying in there. Let's see if we can get our internals working like we have here. Let's do this one. So we get a 1. There we are. So you can see there, they've got all our math turned down. It went into that little cell there, and it just slid right down, and now it's trying to get into the buy. And it's down only 223. There's the numbers right there. And as you can see it on the machine there, on J4X. Now it's minus 225, 222. There's a lot of pressure on these products. Now you can see the S&P 500 is really doing its little bounce over here. You see it's bouncing up. Went into the buy right there, and it's lifting, especially right there. There was the buy, right there. That was the buy signal. not, it was like a good buy. Of course it was a good buy. It was a buy signal, our buy signal. The histogram was plus. There was a green dot, whereas the bars before, 2 bars before, were volatility signals with a red and a green. And one was a minus right there, and the second one was a plus. Matter of fact, there's 3 volatility signals pack to pack. No wonder it's taken off. We've gone from 304 to 309 almost in a matter of 2 minutes. There's a 723 right there, and now we are 725 in 2 minutes. So it's lifting up there. All right, what's left next? Yeah, there's 309. And just flirting with the 309 offer. 309.75's offered now. Quarters offered. Halves. And let's see what let's see which one's this. Let's see what the Nasdaq looks like. Let's shrink that down to a 1. There we are. Doing the same thing. It's trying to lift also. Now it's only down 184, 187, and the low is 774, and now the high, or not the high, but the last is it's 20. What's that? 26. It's 35 points higher than a few minutes ago. Just literally, there's 723, and there's 726. 3 minutes ago, it was at its lows. So you can see the pressure on all these products. And like I said, it reminds me of World War I, where Americans were stunned. We didn't realize people would bring their money here when the world went to war. We thought, oh, well, they'll just won't even find time to invest in capitalism. They'll just walk away from it. It's like, no. Money likes to make sure that their money makes money. All right. From there, I guess we're going to come down to the end. That's it. There's not many products trading besides the stock indices and the metals and oils complex and the currencies. And no questions. We'll see everybody tomorrow. Same time, same channel. So happy trails to you until we meet again, which to me, Tuesday will be like the first day of the week, really. Happy trails to you. To all our trading friends. Take care, traders. And I think we're going to label this one as like, what is real currency manipulation? You know, honestly. Ta-ta.